Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 17, 2025, and we're diving into the third quarter earnings report of Simmons First National. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Simmons First National has had a transformative quarter, and I'm excited to discuss the details with you.
Revenue and profitability overview. Let's start with the financial highlights. Simmons reported a net loss of $562.8 million for Q3 2025, a stark contrast to the previous quarter's net income. However, the adjusted earnings per share came in at 46 cents. John, what can you tell us about these figures?
Indeed, the net loss is significant, primarily due to a one-time loss on the sale of securities. However, the adjusted EPS of 46 cents, which is slightly below the forecasted 48 cents, reflects the underlying profitability of the company. The adjusted total revenue of $232.5 million indicates that, excluding the one-time losses, Simmons is performing well operationally.
Balance sheet repositioning. Simmons undertook a significant balance sheet repositioning this quarter. They raised $327 million in equity capital and sold $2.4 billion in low-yielding securities, resulting in a $626 million loss. How does this repositioning impact their future?
This was a strategic move by Simmons to address the negative arbitrage between long-term bond yields and short-term funding costs. While the immediate impact was a substantial loss, the repositioning frees up capital for future growth and reduces interest expenses, which will benefit the company in the long run.
Operational efficiencies and future outlook. Despite the challenges, Simmons reported a net interest income of $186.7 million, with a net interest margin of 3.5%. What does this tell us about their operational efficiency?
The increase in net interest income and margin is a positive sign. It shows that Simmons is effectively managing its interest-bearing assets and liabilities. The loan yield of 6.31% and a reduced cost of deposits at 2.25% indicate strong pricing discipline and improved funding costs, which are crucial for future profitability.
CEO's perspective and strategic initiatives. George Macris Jr., the CEO of Simmons, mentioned that the third quarter was transformative. He emphasized the overwhelming investor support and the company's positioning for stronger organic growth. How do you interpret his statements?
Macris is optimistic about the future, highlighting the strategic repositioning as a foundation for growth. The investor support underscores confidence in Simmons' strategy. With a focus on dynamic markets, Simmons is well-positioned to capitalize on growth opportunities, which should reassure investors about the company's long-term prospects.
Key takeaways. In summary, Simmons First National faced a challenging quarter with a significant net loss due to strategic repositioning. However, the adjusted EPS of 46 and improvements in net interest margin highlight operational strengths. With $327 million raised in equity capital, Simmons is poised for future growth. Thank you for joining us, John.
Thank you. It's been a pleasure discussing Simmons' strategic moves and future outlook.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on Simmons' performance in the comments below.